Hey everybody, so this week is probably the hardest week. Sorry if the other weeks have been hard, but a lot of people find these financial statements pretty challenging. I'm going to take a little extra time. I know I like to keep these videos fairly short, just because it's hard to stay focused for anything that's too long. But I want to walk through each section. So this week there are three different assignments. The first is the break-even assignment. I'm sorry, the break-even assignment, and then the cash flow assignment, and then finally the assumptions assignment. So break-even is the point at which you've sold enough of your product or service to cover all of your fixed expenses. So in order to figure out your break-even point, you have to know how much your product costs, your cost of goods sold, and you have to know your sales price of the product. So if you know the sales price and you can subtract out the cost of what it cost you, then you have what's called your gross profit per unit, or sometimes you can do it per dollar sold. Then you just divide your fixed costs by that, and that gives you your break even. So I know that sounds confusing. I'm going to show you first a sample. So here's a sample of a break even analysis. Here we've estimated that we're going to make a gross profit per dollar of sales of 91 cents. And then our fixed costs are $1,397. We divide that by the 91 cents, and that tells us we have to sell $1,535 worth of goods in order to cover our fixed costs. The math's not really super complicated, but it's just a little confusing at first. So in addition to this sample, I have added something in the assignment itself, kind of like in the last chapter. There was the sample Excel file for your income statement, your balance sheet. So if you click on financials, you will see the same. Whoops, it popped up over here. Let me find. So it'll bring up this, and there's a tab for break even. And this tab I actually have linked to the previous tabs, which are your balance sheet, so that you can see where the money comes from. In essence, to find your gross profit per dollar of sales, we just go back to your income statement, your P&L. And in this case, we take our total revenues, we take our cost of goods sold, and we can divide that by our total revenues, and that'll tell us our cost of goods sold per dollar of revenue. Or we can take our revenue minus our cost of goods sold. That gives us our gross profit. Divide that by total revenues, and that'll give us our gross profit per dollar sold. So this company makes 91 cents for every dollar of sales. That's high because a big chunk of their sales comes from rental revenue. And then their fixed costs, we can go back to our P&L and see our fixed costs are our total expenses minus any cost of goods sold, because the cost of goods sold are not fixed. They go up the more we sell. Then if we divide that, our fixed costs by our dollars per our gross profit per dollar, that tells us how many dollars worth we have to sell to cover our fixed costs. I've set this up in here so that if you look, there's a note here that gives you the formula for each one of these. So again, I did this because people have had a hard time with this in the past, and so I just wanted to put that in there to make it a little easier for you. If you get stuck, don't be afraid to contact me, and I will help you through the process. But also, before you call me, try to Google it if you're stuck and see if you can find some additional information out there. It might be helpful. So that was the first assignment, the break-even analysis assignment. The second one is the cash flow. So cash flow, in essence, tells us how much cash we're going to have coming in and going out. So this might sound simple, but it's not for all businesses. Of course, if you collect all your sales in cash, then you're going to have your cash flow and your sales number are going to be the same. And if you pay all your expenses in cash, then your negative cash flow, your cash outflow, and your expenses are going to be the same. But a lot of businesses don't do that. Maybe they allow their customers 30 days to pay, so their cash inflows don't match their revenues. Or maybe when they buy from suppliers, they don't have to pay them for 30 days. So their cash outflows don't always match their expenses. So this is a chance to kind of lay out where your cash is coming from and going to. So a cash flow statement is always broken into three spots, or three sections. The first is your cash flows from operating activities. And then the second is your cash flows from investing activities. And your third is your cash flows from financing activities. And then for each of those sections, it's broken into cash inflows, or cash that's flowing into the business, and cash outflows, cash that's flowing out of the business. And so in each section, you're just detailing money collected from customers, that's an inflow from operating. Money paid for inventory, that's an outflow for operating. So you can see this business actually, even though they made a profit in the first year, they actually had a negative cash inflow, or they had an overall cash outflow from their operating activities. Part of that's because they bought all this inventory and they didn't sell all of it yet. Then for our investing activities, the same thing. It's not normal in the beginning to have inflows from investing activities. Investing means buying large assets like buildings and land, and you only make an inflow if you sell one of those. So most businesses are just buying those things up front. So you can see they paid out cash for buildings and paid out cash for equipment. So their net cash flow from investing is negative $75,000. And then financing activities, that's borrowing or receiving money from the owners. You can see this business brought in $112,000. So even though they had negative cash flow from investing and negative cash flow from operating, their overall cash flow for the year, or their net cash flow, is positive because of the amount they were able to borrow and get from their owners. So in addition to that sample, in the assignment itself, I have an Excel spreadsheet that you can use to get you started. Again, this is pretty hard. Don't be afraid to Google some things and do a little bit of research. And also don't be afraid to reach out if you need help. The last assignment's a little bit easier. It's called the assumptions assignment. In the assumptions section, what you do is you spell out all of the ways you came up with those numbers. Really, you just have to do your profit and loss statements. So for example, the rental revenues are based on renting 50 units at $40 per month with an increase of 5 units per quarter. The initial estimate is based upon pre-orders and represents about 50% of the units available. So this is how they're coming up with the number that they put for rental revenue. And they just explain each line item, how they come up with it. That's what you do in the assumptions section. The reason that we don't have to do assumptions for the balance sheet is we already earlier did a capital equipment and a supply list, which shows all of those assets that we're purchasing. If in real life, if you're doing this and you think, there's some item on your balance sheet where maybe you purchased a building that wasn't explained well in the capital equipment supply list, this would be a good place to share it. Just say, we're buying this building in the first year. The price is based on the market price of buildings in the area. Also cash flow. If you're not going to collect all that money, you're saying that you're explaining in your profit and loss statement for some reason, it might be a good place to spell that out here as well, to say the reason our cash flow is different than our revenue is because we're selling to a big customer and giving them 6 months to pay or whatever. So assumptions are just an explanation of where your numbers came from on your financials, most commonly on your profit and loss statement. So anyway, so that's the 3 assignments for this week. Like I said, this is probably the hardest week as far as just stuff that you probably took 1 class on and don't feel super confident on. But you can do it. You can work through it, and I'm here to help if you need it. And you have all of the power of the internet to help you research it as well. So between those things, you should be able to be successful. I don't doubt that you will. Have a great week, and don't be afraid, again, to reach out if I can help in any way.